Please welcome the Deputy CEO, Tim Nye.
Thank you very much for listening to us today. We'll keep it short to not disrupt the timing to lunch too much. So I think first and foremost, I think we wanted to start with a quote by Steve Jobs, which you have to start with the customer experience and work back to technology. For us, despite being a technology company, technology really only is ever a delivery channel. It's all about the actual service experience, the actual customer experience. What does the customer get? With us, what the customer gets is a completely digital bank. And I think we very much feel with the words of Magnus and Karim earlier, in Africa it's not about disrupting. People don't even have bank accounts. Banks don't even offer internet or mobile banking. So what we offer is a first for most of these people, an ability to manage their financials more effectively, an ability to do what they previously couldn't. We recently won an award at the European FinTech Awards. We won the financial inclusion category. And again, it's because we're making that difference. People often ask us, well, but what about M-Pesa? M-Pesa is a payment services provider, and it's a facilitator for us. M-Pesa in Kenya allows mobile payments to happen, but it doesn't allow budgeting, it doesn't allow credit reports, and it doesn't give these people access to money. And that's what these people fundamentally do not have. So for us, it's all about making money accessible, giving these people an opportunity to borrow, and then keeping them as a customer. The newest innovation we've basically recently launched is WhatsApp lending. One of the difficulties in Africa is the more clicks you need to get to a product, the more difficult it is to maintain a customer. So what you try and do is to create a native environment where the customer can use a native environment to use a loan. So right now, by simply adding us on WhatsApp, you can actually go through an entire lending process, take a loan out, and stay with us as a customer. From there, once you have a loan, it's much easier to incentivize the customer to download the application, to now sign up for a bank account, sign up for insurance products, and cross-sell all our products. In Africa, you have to start with lending, because the reality is people come to financial institutions to borrow money. They don't have money, so they don't want insurance yet. They don't have money, so they don't need a bank account until they have a way to spend it. And except for a few exceptions in East Africa where mobile payments are very effectively, there's still a big preference for cash because there's a lack of convertibility of that technology. Building a mobile wallet is the easiest tech in the world. The problem is the value doesn't lie in the tech. The value lies in the ability to utilize the mobile wallet, the utility of having access to that money. So on WhatsApp lending, it's a completely automated chatbot. You can speak with it, it will reply. It's obviously still training itself with every transaction. It's currently live in South Africa. We're rolling it out in further countries over the next 2 months once the South African pilot's completed. It allows full onboarding, new client, repeating client, balance inquiries, anything you really would want to do. What do you want, the term you want. It does a full credit check, so it doesn't give everybody credit, but it allows you to engage. The second thing we launched is an app called Haraka, which means quickly in a local language in Africa. Haraka allows you to take a loan in 2 minutes. Now what we do with Haraka, and it's only live on Android, is we data scrape. So we ask the permission to take the entire data off your mobile phone. And again, those people have nothing. So on the view of potentially getting a loan, they're very happy to give you full access to their mobile phone. The mobile phone data gives you full geolocation history, so you can actually verify that these people go to work or not. It gives you access to the full SMS history, and that's the mechanism to verify mobile money transactions. So with that history, you can actually estimate what was their income and what was their spending. It's accessible across the world. It provides instant access to credit. We pay out a loan within 2 minutes of going through the registration process. We use Facebook for fraud and identity verification, geolocation history plus mobile money plus call history to give the credit score. It's small loans. The average local currency loan might seem high, but in US dollar equivalent, it's probably up to $100. And it's for less than a week. And it's all driven about repeat customers, repeat business. So for us, the key value is not these short-term loans, but these short-term loans allow us to give small loans to customers that give them an initial entrance into financial service. And upon successful repayment, we can grow these customers. And it's the value on repeat business where we think we'll make the most money on customers. Long-term loans with regular repayments, bank accounts, insurance, and good payment behavior is becoming more and more important than ever in the financial services world. So one of the issues we had launching Araka is that the smartphone penetration in Africa is still shockingly low. Malawi has about 4%. I think it's about 11% in Zambia. Zimbabwe is close to 15%. Kenya and South Africa stand out. So in order to basically address this, we've ordered a whole bunch of cell phones from China. The cost to land these smartphones is about $28 in the local country, which relative to international customer acquisition costs is still extremely low. Now, for just a loan, we probably wouldn't give the phone away for free. But if you're willing to open a bank account, we'll give you the phone. It'll come preloaded with our app. It'll come preloaded with a Facebook and a WhatsApp app. And that's really all people want fundamentally. We reverse bill data transmission costs. WhatsApp and Facebook do very much the same thing. So these people can actually use these phones. They will not have to pay for data to utilize these three services because they all get reverse billed to their respective owners. If they want to then use it for internet or other purposes, they'll need to, pay for data. But we'd obviously more than happy to give them a loan to do so. So for us, one of the other things we have to do is brand building. Being a tech business, being online, it's all about trust. Financial services is about believing that if you give that person your money, it will actually come back to you. Now, traditionally, people build big skyscrapers, branches all around the city, main square presence. We try and do it digital. So for us, the key focus on brand building is to basically use videos on TV, do radio campaigns. So I'd just like to show you one example video of a typical advertisement in South Africa.
Hello, baby.
Sorry!
Sorry.
Oh, sorry!
Sorry, don't be sorry. It's not your fault we made online credit so awesome. See your credit score, get access to your bucks 24/7, and let our budgeting tool help keep you on track. GetBucks.com.
So we have different advertisements for all of the local markets to address sort of, local cultural differences. But I think the most important part is we want to keep it light, want to highlight the message, message the brand. Advertising on TV is still relatively cheap in emerging markets, so it's easy to have main presence. And I think, one of the big things that distinguishes Africa is most office buildings will have permanent TVs running. People watch TV. Even the poorest people will have DSTV in their house. So through DSTV, you get a very broad range. Maybe then quickly just about what we've built today. So we started in South Africa and Kenya in 2011. Since then, we've successfully expanded to about 11 countries in Africa, as well as recently Australia. We invested heavily in artificial intelligence. We built one of the first data science teams on the continent. Right now, we have about 10 data scientists. They develop our credit scoring algorithms, which is obviously our competitive advantage. We have since then now disbursed over 300 million euros of loans to customers, given out close to 2 million loans in the meantime, and have had about a 59% customer retention rate and a 7% default rate. That 7% default rate has stayed constant, and we're very comfortable at that level. And I think the great thing about technology and data science is before you'd give out a loan hoping the money comes back. Today you give out a loan with the clear target of getting 93% of the loans back. And it's that risk appetite that allows you to grow much more responsible and as well measure the size, the premium, and you can customize the offering for every client. So we can specify what rate we give you, what term we give you, what amount we give you based on your credit characteristics. And that is an enormously powerful tool to manage credit because it allows us to onboard customers that previously with the one-fit-all product we probably would have had to reject. We listed the company in June 2016. A lot of people ask us, why did you list the company? It probably was a little bit early, but the reality is when you operate regulated financial institutions, and we have 5 banks, regulators look at you much more closely. And ironically, most of these African central bank regulators have an exemption for public companies to own more than 25% of a bank. So to be able to own the banks, to be able to continue growing, we had to list. The free float is relatively limited. The main exception is that we now build the business in the public domain. But we're very comfortable with that. because it also gives us an additional governance layer and an additional ability to provide full transparency to investors. One of the most important things data allows us to do is we can manage the business real time. So at any given point in time, we can see what's going on, what are the collections, what's the loan book, what's the average size, have collections come in. We have real-time flags in every current country about deterioration in loan performance, loan disbursements, revenue recognition. So anything changes, we get an alert. And that real-time management ability allows us to also intervene much quicker than we would have been able to do in a traditional environment. So recently, I think for us, the biggest successes have been listing in Frankfurt, which has given us access to the banking licenses. We have, since then, now also Zambia granted, so 5 granted, 2 more pending. Banking is critical because it allows us to go from purely lending to customers to grabbing their deposits, lowering our cost of funding, as well as keeping the customers, because there is a much bigger stickiness in banking than in lending. We've managed to lower our cost of funding with a number of cheaper funding lines. Cost of funding for us remains obviously a key issue. The problem in financial services is you sell money, and money is a very expensive inventory, as well as some of the banks we acquired. So I think with that, I'd like to thank you for your time. It was thank you for Arquam for hosting us here and letting us present MyBucks on your behalf.